Happy Tuesday, everyone. Welcome. Thank you so much for taking the time to join us today. We're going to be talking about or diving into the world of cryptocurrencies. We'll examine exactly how the current financial system is adapting or looking to adapt digital assets, some of the benefits and challenges of cryptos, and also some practical applications. If you have questions, feel free to type those in the question box and we'll get those answered for you. So my name is Reneika Lightbourne. I'm a business development specialist here at Advanta since 2019. I'm also an Advanta client prior to joining. Self-directing is something that I actively do. Specifically, I do also have digital assets in a retirement account, my Roth IRA. So if you have questions, you want to talk about your scenario, if this is an interest to you, definitely feel free to give me a call, send me an email, or visit advantaira.com to schedule a consultation. So a question came in, the recording. The recording will be up within 24 to 48 hours. Also, you can get a copy of the slides. So feel free to reach out to me to let me know. But the recording will be up on our website as well as our YouTube channel. So just a quick disclaimer before we get started. I just know that at Advanta we don't give any tax, legal, or investment advice. All of the information that I'm going to cover today is just more so for educational purposes. Like we always encourage our clients, you do want to consult with your professional team, whether it's an attorney or CPA, financial advisor, especially too with digital assets. Crypto, it's a new market. It's a new asset class. It's considered to be more so volatile. So you want to make sure that you do your due diligence. So just a quick takeaway, if this is a new concept for you, just know that any IRA or former employer plan, like an old 401k, qualifies to be self-directed. The beauty with self-directing is you're in control. You get to decide exactly what is it that you want to invest in. So whether it's cryptocurrency or something else, you have that flexibility outside of one or two items. And then of course, all of the income that's generated from that investment flows back into your retirement account. If there's any expenses associated with that investment, it's paid out of the retirement account. Just a little history about Advanta and who we are. We've been in business for about 20 plus years now as the leading self-directed IRA administrator in the business and the industry. Our headquarters is in Largo, Florida area, Tampa Bay. And then of course we have an office here in Atlanta, which is where I'm based. But we do have clients nationwide. We have a little over $2 billion under our administration. One of the ways we kind of set ourselves apart is by providing our clients that concierge style service and also providing you educational content, which includes topics such as cryptocurrency and digital assets. Again, this recording will be on our YouTube channel. Also, you can find it on our website. I would encourage you to visit Advanta IRA to check out our events page for any upcoming webinars that myself and my colleagues will be hosting. You can also visit our blog and also check out our podcast as well. Okay, looks like a question that came in and I'll get to it. So if you haven't heard about self-directed, it's not uncommon. It's just simply because most traditional banks or brokerage firms, their business model is stocks, bonds, mutual funds. But in reality, you can indeed use your qualified retirement accounts to invest in alternatives. There's trillions of dollars that's actively sitting in retirement accounts. And of that, less than 4% of it is truly self-directed in terms of private assets. So exactly what is a self-directed IRA? Just very simply, it just means that you as the account owner, you're gonna have complete control over your retirement funds. You have complete control over the investment decisions. You really get to diversify out of the traditional stocks and bonds. So in addition to investing in digital assets and cryptocurrencies, we have a lot of our clients use it to invest in the likes of real estate, whether it's going to be, a single family rental property or a commercial unit. You can use IRA funds to invest in, mortgage notes, tax liens, precious metals, private equities. The list goes on in terms of what's on the table for you. So why do people choose to self-direct? You can look to self-direct for many different reasons. I'll just touch on 3 of them. 1, it's a new source of capital for you. So instead of taking out, a personal loan or tapping into your rainy day fund, if you have funds that's sitting in an IRA or an old employer plan, you can elect to move it over to make your next investment. 2, it's another reason is, the ups and downs in the stock market. While digital assets or cryptocurrency is, volatile, it typically, it doesn't align necessarily with the stock market, so it's not as correlated with stocks and bonds. So it's a good way to diversify your retirement holdings. And then of course the tax benefits, having those interest payments or those returns flow back into your retirement account, tax-free or tax-deferred, depending on the type of account that you have. In terms of the different types of IRAs or retirement accounts that can be self-directed, it's the ones that you're already familiar with. For individuals, you have traditional IRAs, meaning tax-deferred. You get your tax break up front. Over time, once you reach retirement years 59 and a half, you elect to take funds out, that's when you pay your taxes at that time. If you have a Roth account, meaning you've already paid taxes, you grow that account over time. As long as you've had your Roth IRA for 5 years, you're 59 and a half and older, you can take those distributions tax-free. And then, of course, for small business owners, entrepreneurs, you can look to self-direct a SEP, simple or solo 401k. Solo 401k have great flexibilities. You have higher contribution limits. So if you do want to know more about it, feel free to reach out to me and we can talk in detail about that. Some lesser known accounts that are also very, very important. You can self-direct an ESA for your kids to cover educational related expenses, or an HSA to cover medical related expenses. For HSAs, as long as you have a high deductible plan, you can look to open up an HSA. And the good thing too with with investing in cryptocurrency, the barrier to entry or the threshold, is relatively low. So if you have a smaller account like an HSA, you can elect to, take a portion of that and try to or invest in cryptocurrency if you choose to. And then, of course, any former employer plan, whether it's an old 401k, 403b, or TSP type plan, can be self-directed. Okay, so the question is, I have an account with Coinbase, which is after-tax money. Can I transfer my holdings in Ethereum and Solana into an Advanta IRA? So if you can only move funds from a qualified retirement account. So if you have an account that's already a retirement account, then you can transfer over. But Coinbase is an exchange, which is where you would actually go, and I'll talk about how you can invest in an IRA with your Advanta account. You would actually potentially go to a Coinbase or another exchange to actually hold it. So the question, my response to you would be, what type of account that you have with Coinbase. Is it a personal account? Then no, you can't move it over. If it's a qualified retirement account, then you can transfer as much or as little you need to, but ultimately, because Coinbase is a crypto exchange, you would want to go back to Coinbase or another crypto exchange to actually hold and invest in crypto. But again, I have a slide for that. In terms of funding your account, there are a couple of ways you can do so. One of which is making annual cash contributions. You have for traditional and Roth IRAs, if you're under the age of 50, you can put in $6,500 for 2023. If you're over the age of 50, you have an additional $1,000 catch-up to where you can put in $7,500. For SEP IRAs, you can put up to $66,000 if you're under the age of 50, not to exceed 25% of your compensation, your earned income. And then again, as a self-employed individual, if you're eligible for a solo 401k, the flexibility is you get to contribute as an employee and also match as an employer, to where you can put in $66,000 if you're under the age of 50, or possibly $73,000 plus if you're over the age of 50. ESAs, you can put in $2,000 per year per child. For an HSA account, for individuals, you can put in $3,850, and for a family plan, you can put in $7,750. For HSAs, if you are 55 or older, you have an additional $1,000 catch-up. So just keep that in mind. So in addition to funding your account by making an annual cash contribution, if you have an existing IRA, whether it's at a brokerage firm like Fidelity or Charles Schwab or wherever, you can move as much or as little as you want to or need to make your investment. There's no tax liabilities for you to do that. In that scenario, if it's an existing IRA, Advanta would initiate that request on your behalf. You just have to make sure whatever amount that you do want to move, it's liquid, it's in a cash position. If you have an old employer plan, like an old 401k or TSP type plan, you would actually have to initiate that request, meaning letting them know you're not taking a personal distribution, you're just moving it from one qualified retirement account over to the next. So, okay, let's pivot into investing in digital currency within an IRA. So if you're thinking about adding digital currencies or cryptocurrencies to a self-directed account, Before doing so, it's very important that you both understand the bright side and also some of the pitfalls or hurdles that you can face to allow you to be able to make an informed decision when it comes to really navigating this space. Like any investments, especially with crypto right now, just because it's still relatively new, it comes with its sets of risk and opportunities. So some things to be mindful of in terms of risk. One, volatility. So the value of cryptocurrency, we know it can swing, pretty dramatically in terms of within a short period of time. Just last week, we saw the crypto market led by Bitcoin, had a massive drop, which kind of affected the rest of the crypto, the altcoins. So you want to be able to, think long term in this space, and that's the beauty with retirement accounts. You're looking to retire maybe in 5, 10, 15, 20 years. So within the crypto space, within digital assets, you want to give yourself time. You want to give this industry time to actually develop. Another risk to be concerned about, or something that's really affecting the industry right now is changing regulations. We do see governments that are pretty much grappling with to figure out and understand how they're going to regulate crypto, because it's because of unpredictable regulatory environment at this time. It can affect your investment approach. So just be mindful of that. Another risk is some technical challenges in terms of, we hear stories about how investors have lost money due to misplacing their keys, or there may have been a breach in an exchange, or some other technical pitfalls. So just be you want to be mindful of that. And again, the market itself, cryptocurrency, digital assets, it's still very young. So you want to be able to understand that because it's a young market, it's still growing, it's still developing. Because of that, it's unpredictable, and also sometimes susceptible to manipulation. Okay, so in terms of, I know there's with risk, but there's also great opportunities. So on the bright side, cryptocurrency itself offers true diversification. It's unique behavior in terms of it can act as a counterbalance to traditional markets. Kind of giving you an extra layer of a way to diversify. I'll talk about some different use cases within crypto, and again, within crypto itself, you can really diversify depending on your interests. And then two, there's some strong historical performance despite being a volatile market. There are several cryptocurrencies that really over time has demonstrated remarkable growth. Everybody's familiar with the likes of Bitcoin and Ethereum and some other major digital assets in the space. And then, of course, another opportunity itself is the technology, the underlying blockchain technology, in terms of how cryptocurrency applications can revolutionize different sectors, not just the financial sector, but there's it's signaling massive growth potential. And then another opportunity or benefit is, empowerment. Like self-directed IRAs, cryptocurrency can offer you as an investor a level of autonomy and control over your finances, not just with the traditional stocks and bonds. So if we look at the two ways you can invest in cryptocurrency with your Advanta account, one, Advanta, again, we're a self-directed IRA custodian, but we don't actually store your digital assets. So in order to invest in crypto with us, there's two ways you can do that. You can invest directly through your IRA, meaning you open up your account with us, you fund it, but then you're going to also open up a trading account in the name of your IRA. A lot of our clients use the platform ErisX, but you can certainly, if you have a preferred crypto exchange that you work with, we can walk them through the steps if they're not familiar with it. Do know that each trading platform, they control exactly which crypto they list. So you may have an account with multiple exchanges in terms of who you want to actively trade your account with. Another way that you can look to invest in cryptocurrency with Advanta is using what's called checkbook control. So you still go through the process of opening up your account with us, funding your account with us, but then you're going to take the additional step of setting up a brand new LLC, which is actually owned by your IRA. You get to act as manager of that LLC. Ultimately, you'll open up a bank account for that LLC. The funds will then be transferred over to the LLC's bank account, and then you can essentially take that LLC and go to whatever crypto exchange, whether it's Coinbase or Gemini or another trading platform to open up an account with that LLC, which is still owned by your retirement account. And then you can actively then move the money from that LLC's bank account over to that trading platform. And it gives you a little bit more greater flexibility and control over, if you're actively trading or, you're buying and holding. Okay, so let's take a look at merging the tax benefits and long-term objectives of retirement accounts, which can be promising. So you want to be able to, carefully, balance. Okay, so when it comes to when it comes to investing in crypto, there's you want to consider the long-term focus of this ecosystem. Here's some things you want to consider. First, the educational foundation. You want to start by immersing yourself in the cryptocurrency world by understanding exactly, the dynamics of how this industry works in terms of familiarizing yourself with some of the key concepts, some of the major players, the technology itself. You want to be able to understand, the terminology. So in this case, knowledge is going to be your best ally in understanding and getting into digital investing. 2, expert guidance. You want to engage or find someone who's well-versed or knowledgeable when it comes to cryptocurrency. If this is new to you, again, their informed perspective and insight can kind of help you tailor a strategy that fits your risk tolerance just until you get more comfortable with investing. And then that goes to, starting small. You can simply just look to allocate a small amount of your retirement account into crypto. You don't have to start with, an exorbitant amount of funds. You can start very small, kind of gauge your comfort level, and then adjust over time. And then, of course, prioritizing safety. So I know if you're a real estate investor, they always talk about location, location, location. Well, in cryptocurrency, digital assets, it's more so safety, safety, safety. So you want to, when you're looking to invest in crypto, you want to make sure that the custodial institution that you do use does have a stringent security protocols, whether that's incorporating institutional like storage, or if they're using cold storage. You just want to emphasize with them or find out from them what are their security measures. Okay, so as we pivot into the evolving realm of financial technology, decentralized finance, also referred to as DeFi, really stands out as a game changer. We'll take a look at stablecoins as well. Some things to be mindful of when it comes to DeFi. At its core, it's really revolutionizing financial services, more so because of its operating blockchain networks. It revolves around more so, transparent operations, unrestricted assets, and committing to resisting external control or censorship. From an operational perspective, at the heart of DeFi, there are platforms that serve to focus on more so lending and borrowing, which is utilized through smart contracts. So these automated or self-executing smart contracts more so helps determine the terms or agreement to ensure that there's a seamless operation without any human intervention. So smart contracts is really the operational foundation for smart contracts. I'm sorry, for DeFi. And then, of course, some examples of some DeFi platforms includes the likes of MakerDAO, which kind of introduced decentralized stablecoins. We have Uniswap, which is more so focused as a decentralized market exchange, and then Aave, which is a lending platform. And they all serve as tangible testaments in terms of what DeFi can really achieve. Some of the advantages or the most compelling aspect of DeFi is its mission to really democratize finance, not only by projecting or championing financial accessibility for all. It also kind of helps to minimize or trim down costs when it comes to compared to the conventional financial system. Okay, and if we look at stablecoins, some of the things to understand or be familiar with when it comes to stablecoins exactly in terms of what are stablecoins, and they're just digital currencies that's aiming to keep their price consistent. So imagine, you can kind of vision or imagine them as a bridge between the stability of a regular dollar and the digital world of crypto. So these stablecoins are more so currencies that's pegged to stable assets like the US dollar. Some examples or kinds of stablecoins. There are several different stablecoins, but a popular one is USDC, and it's backed by real US dollars that's in a bank account, which kind of helps maintain its value. So it's just more so fiat collateralized stablecoins that's backed by fiat reserves. And then of course some use cases when it comes to stablecoins in particular. They're ideal for international payments and can also act as a volatility hedge in the crypto market, meaning, in essence, if you, as opposed to if you're waiting to find your next, crypto investment, you can have your funds sit in stable coins until you decide to, whether it's buying Bitcoin or something else. Okay, so question came in, are there any crypto indexes to measure returns or losses? There's some tools and resources out there. I can certainly, provide you a list of websites to check out to help you. Yes, so question, yes, I can send you a list of websites to check out for that. So, okay, let's unpack how cryptocurrencies is reshaping the traditional financial landscape and how it looks to simplify financial systems. One of the key things is adoption by institutions. We do see traditional financial players are, more so exploring cryptocurrency, whether they're actively starting to invest or invest our clients' money into digital assets or its technological advantages. We see the role of some major companies, for instance, like BlackRock and other world-leading financial institutions recently applied for a Bitcoin spot ETF. Obviously, when you have a company like BlackRock applying for something, chances are it's likely to be approved. Maybe it's going to take 6 to 9 months, but it's a good thing for the ecosystem as a whole. In terms of reshaping financial landscape, another thing is asset tokenization is really popular. It's just more so just transforming real world assets into digital tokens, which again provide accessibility for many or for all and liquidity. So real estate tokenization is something that's really really gaining some interest with investors. Another use case or a benefit is remittance. So we know that digital assets and cryptocurrencies can make cross-border transfers much more faster and affordable. There's some major company out there that their whole entire business model is focused around cross-border transfer and making it cheaper, faster. And then of course regulation. I think that's the biggest issue that the crypto industry has been dealing with. The crypto asset market, has seen some amazing highs. It's also had some volatile lows, especially over the past year. We've seen crypto firms, collapse. We've seen some unfortunate misuse of asset funds and fraud. And while it's not more so the fault of the underlying crypto blockchain technology, it does really emphasize and underline the strong need for regulatory policies that's going to be able to, oversee this industry both here nationally in the U.S. and overseas. Okay, so in terms of regulation, globally, I think there's been a trend towards more clear and favorable crypto regulations, but in the U.S. we do see that there's some ongoing legislative discussions, including some, a few crypto-related and stablecoin bipartisan bill that's in Congress right now. Obviously, there's no specific timeline, but hopefully, later in this year, whether it's October through December, that they finally do get to vote and pass the bill. One of the more popular bills that we see is one by Senator Loomis and Gillibrand, which is kind of aiming to refine how cryptocurrency oversight is being regulated and monitored. They're looking for maybe the CFTC to kind of step up and regulate crypto exchanges, and of course with stable coins, more so to have them regulated by depository-like institutions. So we definitely have to keep our eyes out for how the U.S. is going to regulate cryptocurrency. I know abroad you have other major countries that are, proactively, approaching it in a more sensible way in terms of, hey, this is going to be a part of mainstream. So they're setting proactive regulation to help grow this space. The reason we would encourage, regulation, you want to make sure that the rules are clear for new projects. You want to be able to attract bigger investors who are looking for regulatory clarity. The likes of, BlackRock or another major institution like Fidelity, they're not going to get into space if there's no clear rules of the road. And then, of course, with regulation, it will encourage innovation. It makes it safer. It's going to foster innovation by, creating a safe environment for developers to really grow this space. Okay, so as we look at the area of digital currencies, which is managed by central banks and transaction systems like FedNow. FedNow officially, launched over the summer. We're going to look at exactly, how these financial tools are looking to help propel the monetary world. So one of the benefits or the improvements that central bank or CBDCs or FedNow is looking to build upon is instant and faster transactions. So we know the days for essentially waiting for payments to clear or sending wire transfers are essentially numbered. With the implementation of CBDCs or FedNow, immediate settlements can enhance business operations and also convenience for consumers. So if you're looking to send money overseas, instead of waiting, a day or two or having high fees, it can essentially be sent for near pennies on a dollar. And then two, enhance transparency with digital systems. By very nature, it can offer clear transaction trails, but it also provides ensuring legitimacy. I know one of the major concerns with CBDCs is that has been raised is more so their privacy concerns and data security. So I think that they do have to, be cautious or mindful of exactly what protocols that they're going to allow in a CBDC, where personal and individual users' privacy is still protected. And then going back to cost efficiency. So again, a promising aspect is the potential to reduce transaction costs if somebody wanted to wire money overseas. Let's just say, you're in the US and you want to send money to your family in Mexico or, Japan or wherever. If you send it via Western Union or MoneyGram, typically, it's really cost prohibitive. With implementing the likes of digital assets via, CBDCs or FedNow, is going to reduce those costs significantly. Question is it true that with CBDCs that they can also be controlled by the Fed and restrict your account? Just reading through, the different pros and cons, that has been a concern that has been brought up in terms of, okay, restricting someone's, access or account, that is a viable concern. I don't know that they're going to do it, but this is where Congress has to come in and vote and say, okay, what's allowed and what's not allowed, and hopefully that they do protect the individual rights of each consumer and not, unfortunately try to restrict someone's account. Okay, so if we pivot and look at some of the real world use cases, when it comes to exploring practical application of blockchain, it really has some powerful tools, paving innovative solutions across many different sectors. Again, not just, real estate or financial. It is actually multifaceted in terms of some of the use cases for this technology. Again, a favorite one is real estate tokenization. We know blockchain does allow tokenization of physical assets, meaning, real estate itself tokens can represent partial ownership in properties, allowing for fractional real estate investments. For you as a self-directed investor, you can allocate whatever X amount of dollars. For example, you may want to take $1,000 and, invest into a commercial unit, something very similar to REITs, but that's one of the most popular use cases, especially within self-directed investors. Some other real world application that comes to health and medical records. With blockchain, patients' medical records can be securely stored, shared among authorized medical professionals, and this helps ensure that they're, the data integrity, swift access in emergencies, and also lead to better treatment and outcome. Another real world use case that I did emphasize earlier is, finance and cross-border payments, with traditional international transaction, which can be slow with, sending a wire. This really helps with facilitating quicker and more transparent, cheaper cheaper transaction costs. Another use case, and we've seen this, I think this is out west, the voting system, digital voting platforms using blockchain can kind of offer more transparent and tamper-proof election, addressing concerns of fraud or malpractice is another use case that likely is going to develop more so in the future. Another sector that's been benefiting from the use of digital assets is the energy sector. This is where more so decentralization offered by blockchain, provides peer-to-peer energy trading platforms. So you can sell, access energy backed by, grid directly to, a neighbor or a company. So I would encourage you, like if you go to, I think, cryptoslate.com and you look at one of their tabs, they literally break it out in terms of the different sectors within crypto. So that may be of interest to you. If you work in the energy space and you also have an interest in investing in digital assets, you can kind of tailor and see what jumps out at you in terms of you may have expertise in. Another benefit or use case for digital asset is the entertainment and intellectual property. For an artist or content creators, blockchain really helps with facilitating more so transparent royalty payments and copyright tracking. So it really kind of helps combat any issues with piracy, or ensuring that these creators get they're fairly compensated for the work that they do. I know this is just some of the application, but I would encourage you again, if you have an interest in something, you can find a quality or utility-based digital currency to kind of align with what you're looking to do, and you can possibly look to add that into your retirement account if you choose to. Okay, so if we're just kind of recapping in terms of investing in digital assets in your IRA. So again, you want to crypto custody solutions. You want to be able to safely store digital assets within an IRA. You want to talk with your preferred custodian or that digital platform to make sure that your digital assets is stored securely, it's compliant. You want to be able to make sure that your crypto keys are protected. I know that we're starting to see some institutional grade custody solutions that are being rolled out, so be on the lookout for that. Another thing is, portfolio diversification. Traditional IRAs, or conventional IRAs, again, their focus is stocks and bonds, but you can use your self-directed account to incorporate cryptocurrency and really diversify. And then within cryptocurrency itself, you have a long list of different asset classes, or long list of different use cases that you can kind of invest in. Some of the tax implications, of course, one of the significant advantages of an IRA is the tax structure. So as an investor, like let's just say if you're an active trader, so if you're trading cryptocurrency outside of an IRA, then you're going to be likely subject to capital gains taxes. Whereas if you're holding those cryptocurrencies or you're actively trading, those currencies within an IRA, then of course, if it's a traditional account, it's tax deferred. If it's a Roth IRA, as long as you've had that account for 5 years and you're 59 and a half, when you take those funds out, it is actually tax-free. And then of course, too, you want to make sure that you're doing your due diligence, as with any investment, especially with cryptocurrency, because it's still new, it's still volatile. It is essential that you understand exactly what is it that you're investing in. You want to make sure that before you add a crypto into your IRA, you want to thoroughly research, you want to read the white paper, you want to understand the current market dynamics, and also consult with an advisor or someone who's very knowledgeable within the crypto landscape. And then the benefits of the potential for growth. We know because it's still young compared to other traditional assets, the potential for significant growth and the barrier to entry really gives you an advantage. These major companies or major players won't be entering the space that they're starting to do now if this space was not sustainable. Personally, I do think that it's going to be, it does have real world application. It's going to be here for a very long time, but it's still working through some of those minor challenges. But again, the major players like BlackRock is not going to associate themselves with crypto if it was not here to stay. And then of course, again, regulation. I think it's worth noting that, you know, future regulations, as long as it's sensible, it allows the space to really develop. Question: is there more than one blockchain program? Who controls the blockchain? So there's different protocols out there. Layer 1. Again, I can send you a list of resources, but with cryptos, most blockchains are decentralized. There's this this conversation about permissionless or permissioned, or centralized or decentralized, but there is different layer 1 protocols out there that I can kind of talk you through if you're interested in. Centralized blockchains, obviously, those are the ones that are controlled. Decentralized blockchains, those are the ones that are more so, they have different ways that they operate, whether it's through a consensus mechanism or it's through proof of stake, but I don't want to get down the rabbit hole on that, and we can talk through that offline. So again, 2 ways you can invest in cryptocurrency with us is directly through your IRA, but you would also have to establish an account with a cryptocurrency exchange. Again, the type of coin listed is based on that exchange that you go through. We can certainly walk your exchange through if they need the steps in terms of how you can do it. Again, our clients typically use ErisX. It's just an easy API plug and play. Another alternative is through checkbook control, setting up an LLC that's owned by your IRA, and then ultimately you go into your preferred crypto exchange to open up an account in the name of that LLC to invest. Okay, and just to kind of recap in terms of digital currencies that are impacting the financial world, again, both opportunities and challenges. You want to make sure that you're staying informed. You want to continuously do your research, check out the latest news trends. There's a lot of quality websites out there where you can kind of plug in and get familiar with the terminology or the latest news and trends. For instance, this week, one thing you want to keep your mind on, keep your eyes out for. I know this week there's the BRICS countries doing a summit, and I know one of the things that they've been talking about actively is possibly creating their own, central bank, or more so their own digital payment system. So you want to be on the lookout for that as well. Another thing is, again, consulting with a professional who's familiar with cryptocurrency, and if you do decide to invest in your IRA, then working with a self-directed custodian that would allow you to do just that. And then, of course, you want to make sure that you're weighing the risk and also the benefits of cryptocurrency, because sorry, question just came in. So yeah, a question is a list of cryptocurrency exchanges that allow you to invest with your IRA. So question is, okay, I've been waiting for the slide you mentioned that addresses my question. You've mentioned that I can't transfer my holdings. So if you personally own, Bitcoin or Ethereum personally, not in a retirement account, then no, you cannot transfer that over into a retirement account. So one of the few rules or restriction is personal, prohibited transaction, meaning if you own a personal property today, you can't transfer it over or sell it over to your IRA. You would have to have purchased that crypto or that, that digital asset from the onset, from the beginning, meaning open up your IRA and then have your IRA buy Bitcoin or Ethereum or something else. So right now, if your account is not an IRA, then you cannot, or some other retirement account, you cannot move it over into a retirement account. So yes, if it's a personal account, unfortunately, no. You can open up an IRA funded by putting cash in your account and then going out and purchasing whatever crypto you decide to. Okay, looking at other questions. You're welcome. So, okay, yes, you want to stay informed. You want to consult with a professional, advisor in the space. You want to make sure, be mindful that yes, crypto is volatile, but there's still some great opportunities in there, especially with starting at a smaller dollar amount. You can start small and then ultimately if you're looking to, invest in a utility-based project that's going to be here, that's solving a real-world issue, that's going to be here for the long-term play, then it gives your IRA the opportunity to really see some exponential growth over time. Okay, if you're looking to get started with us, just know that you can open up your account in 3 simple steps. Step 1 would be filling out the paperwork. You can do it electronically. You can do it on our website. Step 2 is funding your account. There's a couple ways you can do that. Again, make cash contribution. You can transfer from cash from an existing IRA, or move funds from an old employer plan, and then finally start investing. So if you want to, purchase, Bitcoin or, XRP or, Ethereum, whatever you're looking to invest in, you can certainly open up your account, find an exchange platform that allows you to do an API plug and play, or utilize the LLC structure. Okay, I think I covered all of the questions that came in. If you have any additional questions, feel free to put those in the question box. So right now, yes, Coinbase may or may not, offer IRA accounts, but you can certainly see if they do LLC structure, if they would allow an LLC to open up an account. So that can be an alternative way to potentially first, again, open up your IRA, open up an LLC. If they do allow LLC to have an account with them, you still have to authenticate your identity, but that could be a one way because you're familiar with the Coinbase platform, because it's, the only digital exchange here in the U.S. that's publicly traded. You can see if they would possibly allow you to have an account with them through an LLC feature structure. A question that came in is, well, again, we don't give any investment advice. You have to find, if you have an interest in something, again, with self-direction, it gives you control to invest in something that you know, something that you understand. If you're new to crypto, you just want to, again, get yourself, comfortable in the space, educating yourself, reading, getting familiar with the terminology. But if you go to, a website, let's just say, again, CryptoSlate, this is not me endorsing CryptoSlate, but if you look at the different sectors and maybe you professionally, you work in advertising or you work in healthcare, there's different cryptos that's related to that specific sector. That might be easier for you because you're already familiar with the industry as a whole if you work in that space. So that's one way to help you investing in something that you know, something that you understand, something that you can, it's easier for you to kind of keep up with. Crypto is a fast-moving industry. The news comes out, pretty quickly, but you definitely want to stay up to date. Be on the lookout for hopefully some sensible regulation here in the U.S. And let's see, question. Okay, question is, how do I set up a time to talk with you about buying some crypto in my Roth IRA? You can certainly just, give me a call. You can certainly send me an email and we can allocate some time to get on a call and talk through it. You can also go to Advanta IRA and schedule a consultation with me, but I'd definitely be happy to walk you through the steps of opening up an account to invest in using your Roth IRA. I personally have crypto in a Roth IRA, and again, that's an account that I'm not looking to use for 20, 30 years, but hopefully within that time, this ecosystem has developed enough to where I would see the return on my investment. Okay, so a question came in. This is not my area of expertise, so I'm not well versed, so I don't want to answer it. But the question is, do you know anything about QFC, Quantum Financial System, and the difference between the old SWIFT banking system? That's not my area. I've heard of QFC and switching over to a new system, but I really can't speak on it. Yes, this you can get a copy of the recording and also a copy of the slides. We can send it over to you PDF, and then this will be up on our YouTube channel later today or tomorrow. So this is more so a comment, just bear with me. I think the way to solve my dilemma may be to cash out with Coinbase and then open an Advanta Roth IRA and deposit it in there and invest in crypto. So there's 3 ways you can fund your account. You can open it up, you can make an annual cash contribution, but you have to have earned income. So as long as you can show that you have earned income, you can open up an account, a brand new account, make a contribution, and then look to purchase cryptocurrency with that annual contribution. If you have an existing IRA or an old 401k, you can, again, move as much or as little as you want to, open up your account, and then ultimately purchase cryptocurrency. So the question is, does it make sense to take any action until US regulations are clear? Personally, I would implore you to, like, again, you just have to start small. We know regulation is coming. There's a couple of bills out there that's going to really help clean up this space or make it a lot clearer for investors and financial institutions. But I would say, yes, you want to start, start now, start early, start with a small dollar amount just to kind of get familiar with it. What you don't want to do is they provide, regulation, but you missed an opportunity where you could have purchased. Like, okay, this is not me advocating a particular crypto, but 10 years ago, Bitcoin was what, 10 cents, $1, $5. Today it's now, 20-something thousand, 26,000. So if you're starting out now, we know regulation is coming. There's active discussions, globally and here in the US. If you were to get into a particular crypto, and right now it's maybe under $1, and by the time regulation comes, it may propel that, that particular crypto from 50 cents to maybe $3 or $5. Well, if you wait until regulation, you would have missed that opportunity. So again, this is based on your discretion, but I would say, the sooner the better. Do your due diligence, take as much time as you want to and need to, but you don't want to wait until the gains are. Sorry, my phone just rang. You don't want to wait until after regulation come and you've missed an opportunity to really maximize the return on that investment. Okay, so question is, so once you buy cryptocurrency with your independent account, IRA account, you can grow it and put it back into your retirement account. So you have to buy crypto in the IRA you have to purchase the crypto from the in the IRA from the very beginning, from the onset. Let's just say you open up your account, you fund it, you bought a crypto at $1 and it went to $3, and you decide, you know what, I want to get out, I want to take some profits. When you sell out of that crypto, those funds will flow back, that $3, would flow back into your IRA, and then you can elect to, reinvest it into another crypto, or if there was a market pullback for that crypto that you originally purchased, you can elect to purchase more. So you have to buy it in the IRA from the onset, meaning what you can't do is, if you have crypto personally today, you can't transfer or move that crypto over into an IRA. You have to purchase it originally in the retirement account itself. So question is, can you take out after 59.5 tax-free? So if you have a Roth account, meaning post-tax, you've already paid taxes on those money that's in that Roth account, and as long as you've had that Roth IRA for 5 years and you're 59.5, then yes, you can. Okay, that covers it. If you have any other questions, last-minute questions, feel free to put those in. I'll keep it open for a little bit longer. If you want to know more, if you have a specific question or you're looking for a certain resource, again, that's not me advocating, but I'll just give you a general consensus of where to go look. Feel free to give me a call or send me an email. So question is, do you have to wait 5 years after opening up a Roth account in order not to pay taxes? So let's just say you're 56 or 57 and you just open up a Roth IRA and you put money in there. You would have to still wait the 5-year period in order for it to be tax-free. So hopefully that's what you're inquiring about. But yeah, you still have to, in order for it to be tax-free, you have to make sure you've had that account for 5 years and you're 59.5, or you're older than 59.5. So if you open it up at 58, you would still have to wait the 5-year timeline. I think that covers the questions. Again, any more questions, put them in. If not, thank you so much for taking the time to join today's webinar. Thank you for your questions. If you want to know more, feel free to reach out to me.